Hello guys, Joe with Bitraged. So yesterday we started to make a run here for Bitcoin, and really why that happened is because of some positive news that came out here recently, and that's from G20. So the committee there at G20 rejected a call for more regulation on cryptocurrency, basically said it wasn't necessary, and because of that call, the market has seen more strength for bulls. It's instilled more faith into the market, into buyers, and this move here is a pretty good show of strength. So we broke through 8,200, 8,300 and broke above 23.6 on the fib scale. So that's a good, strong move in itself. Now, we did come up to about 8,800 and saw some rejection at this point, so we have to watch that. So to make this run and to solidify this run, we need to close and see a daily close above 23.6, above 8,200, above 8,300, that line there. We need to see a daily close above that to really solidify this to go further. To those who say that technical analysis, reading a chart is like reading tea leaves or whatever, we've had quite a few people say things like that. To those people, I say, why did this happen? If there are no fundamentals, if there are absolutely no reasons why a chart does what it does, then why did this happen over 4 days? Why did rejection happen over 4 days? And we drew this on Friday, I think when we were seeing this candle here. And then over the next couple days, we just saw rejection, 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 exactly at resistance. If there was no fundamentals in the market, if charts do whatever they want and it's all random, you would not see that. Now, like I said, the reason why we saw this run is because of news from G20. We came up off 7,300, 7,200-ish, and then the news from G20 kind of just picked up and we saw buyers enter the market. So here's what you want to think about. Most people are going to be entering a position here. They're going to be entering a position here because they're going to watch this run up. They're going to get scared that they're missing out. They're going to enter a position here. You don't want to do that. This is not your trade entry. You never want to enter at the top of a run. So where would you enter? Here's what I would do. I would watch 23.6, right about 8,300. And like we saw on this chart here, the daily chart, watch 8,300. We need to close on the daily above 8,300. So here on a shorter time frame, coming back down, what we want to see is it come down to 8,300, catch support, and then go back up and retest 38.6, which is about 9,000. That's really what you'd want to see. If we don't close above 23.6, if we don't make a daily close above this resistance, it's not going to solidify this run, and we're likely going to continue down. So from here, we did see some rejection at about 8,800, way up here at 8,800. And so to see something kind of like this would solidify a trade. So if you saw price come down to 8,300, bounce up off of 23.6 and accept that as support, that is where you would enter your trade in this window. But if we don't, if we break 8,300 and we break back through, and as we said, especially if we close on the daily below that, we're just going to continue our downtrend channel. So without a box like this, without an indication on the chart, you're just looking at a sideways movement. But when you draw out support and resistance, now you're looking at something a little more interesting. So rejection over all of these days is really quite interesting. And that can give you a good idea of where the price might be headed. So on this day, we went all the way down to 7,300. It got bought back up to here. And then you would just watch this resistance level. And that's what we're doing right now. We're waiting to see if this will hold as support. Because if it doesn't, well then the run obviously means nothing. So we're dropping off here quite fast now here in the last couple minutes as I'm recording this. And so we drew out these arrows a couple minutes ago. We need to hold 8,300. Like, that needs to stop us, and we need to establish support there to take us to 38.2. If we don't, and we may not, given how fast this run has taken place, we're just going to be looking back to where we ran up off of in the 7,300 range. And as I said earlier in the video, you don't take a trade at the top like this, and a lot of people do. And this is exactly why you don't do that. Because, you know, we could see a pattern like this, which ends up continuing, but we also could see a huge sell-off like we're seeing right now. So that's not your trade entry. Your trade entry is always support. So if we draw some trend lines here, we got squeezed into a wedge for the market here in the shorter term. And whenever that happens, price has to react. So the market can't stay squeezed into a channel like this without reacting. Now, sometimes that reaction is not as extreme as this, but it is a good reversal signal. But as we've talked about here, we're now right on this support. So at this point, we're not bullish, and at this point, we're still in the correction. So really, like I've said, to make this bullish, we'd want to see this close above 23.6 on the daily, above 8,300. We'd want to see that close, because if we don't, we could see this sell-off come down to 8,300 and then do the same thing we've seen the last several days. And if that happens, we're just going to continue this trend, likely, or we're going to retry. And just so you know, we're basing our fib scale off of solid resistance up here and this bottom here, which did prove as a bottom because we saw the run. So you can see a bottom like this form, see a big run, doesn't necessarily mean the correction is over though. So really, as a trader, you're looking for validation, and you do that with support. So looking at the RSI here, we were approaching oversold, and we know that historically Bitcoin can't be oversold for too long. Back here at 6,000, we got into oversold. And if you look back in the chart, whenever we enter oversold, price always reacts, and it's usually pretty drastic. So if you're watching this and you want to understand where the price is going to go in the future, here's what I would say. Go to your chart, draw out a reversal zone like this, base it off of the candles. Find support, find a high, find a low, find support, and then draw these out and then keep it for the week. So you could draw this out at the beginning of the week, and it could still be valid by the end of the week. Alright guys, so I'm going to end the video here. But like I said, watch the 23.6% level, 8,300. Watch that level. If we hold support there, you're simply going to look above. You're going to look up to 8,900. But if we don't, and we break below it on the daily, and here on the shorter time frames, obviously, you don't want to trade that, because breaking below it is going to just signal the continuation of this trend, and this would just be a short-term spike. that ultimately ends up in a continuation of the trend. That's going to do it. Thanks for watching, guys. Take care.